Live from Bloomberg's world headquarters in New York, welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. I'm Tim Stenevec.
And I'm Katie Greifeld. Chennai Basak is off today, and coming up, the Trump administration is fueling crypto volatility with the back and forth on tariff threats.
Meanwhile, Trump's so-called crypto czar, David Sachs, is set to unveil his strategy today to make the U.S. the crypto capital of the world.
We'll discuss it all with Coinbase's chief policy officer. The company this week making a push in D.C. with U.S. banking regulators to remove barriers for crypto services.
That's all ahead over the next half hour on Bloomberg Crypto. First, though, a check of whipsawing that we've seen in the crypto market over the past few days, and there has been quite a bit. We did see a broad sell-off in crypto assets. Over tariff concerns, it hit before equity markets opened on Monday here in the U.S. Bitcoin falling to a low of $91,000 per Bitcoin. It did pair those losses and move higher a little later in the day after Trump agreed to hold off on tariffs on Canada and Mexico for a month. Look at this, over the last 3 days, down about 2%. Those Bitcoin moves, though, they're pretty small compared to what we've seen from Ether over the past few days. After Bitcoin, it is the second largest cryptocurrency. Look what happened on Sunday. Can we call this a flash crash? It briefly plunged as much as 27% before pairing some of those losses, still down about 12% over the last 3 days. Katie, I take it we saw some action when it came to flows. I know you love watching the money.
I do. I love ETFs. I love flows. I love trading volume. And we certainly saw a ton of trading volume. Like you were saying, of course, Ether ETFs, they saw record volumes yesterday as you saw those leveraged positions unwind sharply during that 27% plunge. And you had a partial recovery, but sentiment still a little bit sour today as we watch the back and forth on tariffs. You take a look at how it's translating, though. In white, you have that record day of volume, more than $1.5 billion in terms of trading volume. So it's definitely been a rocky ride, to put it mildly, Tim. Well,
let's get a little idea of the price action. Moneta CIO Aoifinn Devitt joins us now. Aoifinn, good to see you this afternoon. Is it possible for us to still call crypto in general a safe haven? Ether seeing a 27% crash on Sunday.
Well, I've never called it that. I'm not sure who had. Our position as advisors has always been that we have not yet had sufficient information about this asset class and a kind of a 360 view as to how it's likely to perform in the event of a market crash. We don't know the characteristics it has around interest rates, inflation, all the dynamics that drive markets. I think what we're starting to grasp is that it is very much a risk-on asset, and it is probably at the extreme of that risk. Clearly, some tolerance for volatility is needed to own this. So that's exactly how it is now performing. And when we see risk off in markets, we do see this, as you called, a flash crash. So I think there is an element that this could be seen eventually as a bit of a way to diversify against fiat currency. I still would call it a safe haven.
Okay, well, let's talk a little bit about that. One of the reasons I did mention at least Bitcoin being referred to as a safe haven, we've had some folks call it digital gold, and the idea of gold is a safe haven asset. Is Bitcoin digital gold to you?
Definitely can be aligned with gold in terms of how we think about it as a hedge in the portfolio, but only as a hedge against fiat currency. And right now, there doesn't seem to be that much of a lack of appetite for fiat currency as we've seen this strong demand for the dollar. So I can see it as a diversifier. Certainly, it will in time, we think, have its own characteristics that act separate and apart from markets. But at this point in time, it's very much behaving like the riskiest of the risk-on assets within markets.
I actually called gold physical Bitcoin, just to be a little bit cute. Aoifinn, I don't expect you to agree with that, but within the crypto space, I mean, when you talk about havens, where's the haven, so to speak, in the crypto market? Because obviously Ether fell out of bed in a big way this weekend. Bitcoin did too, but to a lesser extent. I mean, if you're looking for the gains, but maybe a little bit less of the volatility, I take it that maybe Bitcoin is the place to go?
Certainly it's seen as the definitive, I suppose, the original, perhaps a first mover. In terms of where you would dip a toe in the water, and that's the only context in which we work with our clients at the moment. We provide a lot of education. We talk about the characteristics of the asset class. Clearly, with the emergence of ETFs, I wouldn't say we're in a safe haven territory, but we are in more mainstream in terms of instruments, and that's a key difference. We're not forced to go really off the off the radar screen in terms of where to find ways to get exposure to digital assets. It's more mainstream, more liquid, and for that reason, I think that's a probably more accessible point. It's by no means a safe haven, though. I think it's a place to dip your toe in the water.
All right, so buyer beware there. Let's talk about catalysts a little bit, because we're hovering around $100,000. We got as high as $110,000, but it really feels like we've been stuck in this $100,000 range for a little bit here. We know that there's a lot of sort of regulatory events coming up. There was a Senate bill on stablecoins introduced this morning. We have a debanking committee hearing tomorrow, I believe. What do you think, though, will be the catalyst to push us either above or below this range that we've been playing in?
Definitely the regulatory tailwinds are going to be a strong positive catalyst. I would say, though, all of these data points that you've pointed at, these milestones, are very likely to be drowned in the cacophony that we're seeing right now around tariffs and other pieces of news. So we have had this flooding of the zone, and I think that Bitcoin news is very much getting buried beneath all of that. We know that it's long-term positive, though, in terms of the regulatory tailwinds. So that's going to be something. I think once some of the dust settles on the tariff discussion, and maybe this 30-day stay of execution will allow us to actually focus on other areas, maybe that will allow us to focus on this incremental validation that we're seeing around digital assets. There is a great story to be told here in terms of perhaps the use case and how regulation can really improve the investment case. But we haven't had a chance to hear that story because it has been drowned out.
As you can see on the screen, Bitcoin's up 43% since the election. I do think it would be fair to say that a lot of that has to do with optimism about regulatory clarity, perhaps some excitement over a potential strategic reserve of Bitcoin. We don't know at this point, but some folks are optimistic about that. What type of optimism is already priced in, though, Aoifinn?
I don't think we have the extent of the full optimistic case yet priced in. I'd say there is still more to run because we still haven't seen evidence of what this new regulatory environment looks like. Even the strategic reserve discussion, again, kind of very much high level, nothing really fleshed out. We haven't got into the detail of that yet. So I'd say right now we're riding on some optimism, and probably with the arrival of ETFs, as I mentioned before, much more breadth in terms of holding. That's going to be a floor under this price, or at least some stability around that. So I would say I'd say maybe 20-30% of the news has been priced in. I do think if you listen to other commentators that there's quite a bit more to play out, and I just don't think there's been that digestion factor yet.
All right, Aoifinn, always great to speak with you. That is Moneta's Aoifinn Devitt. Now, coming up on this program, the White House crypto czar is about to lay out his strategy, and a Republican senator just unveiled a framework for stablecoin regulation. We'll discuss the latest with the U.S. when Coinbase's chief policy officer joins us next.
And last week, ECB President Christine Lagarde was asked about a reserve Bitcoin stockpile. Here's what she had to say.
I think there is a view around the table of the Governing Council, and most likely the General Council as well, that reserves have to be liquid, that reserves have to be secure, that they have to be safe, that they should not be plagued by the suspicion of money laundering or other criminal activities. And as a result, I'm confident that reserves will not enter, that Bitcoins will not enter the reserves of any of the central banks of the General Council.
Well, today the Senate introduced the Genius Act, a bill to create a regulatory framework for stablecoins. This comes as White House crypto czar David Sacks is scheduled to lay out his digital asset strategy later on this afternoon. Bloomberg's Lydia Bayud covers regulation in D.C. and is with us now. So, Lydia, let's start with David Sacks. What exactly are we expected to hear in terms of substance when it comes to the crypto strategy?
So later this afternoon, Sacks is meeting with the heads of the Senate and House Banking and Agriculture Committees. Ag is important because they oversee the Commodity Futures Trading Commission. Banking oversees a lot of financial regulators. And they're all kind of showing a show of force that they are united and ready to work together on advancing crypto policy in the U.S. in a way that we definitely didn't see during the Biden administration.
What are the chances that something like this actually passes? It's co-sponsored by members of both parties, so there is some bipartisan agreement here, a rare thing to see in Washington these days.
So this particular meeting, my understanding is it's the Republican heads of these committees in the House and Senate, but you're right, there is a lot more bipartisan momentum behind crypto regulation and providing some clarity through legislation for how this industry is regulated in Washington. So, you know, if there's ever been a moment, definitely the feeling in Washington is the moment is now. We'll see what actually comes of it.
All right, we'll have to wait and see, and we'll be checking in with you as soon as we do see any movement there. Bloomberg's Lydia Bayou joining us from Washington, D.C. Also in D.C. this week, Coinbase urging U.S. banking regulators to clarify or amend their positions in order to allow banks to offer custody and trading execution services for crypto. A Senate committee is set to hold a hearing tomorrow on what's referred to as debanking. Coinbase Chief Policy Officer Faryar Shirzad joins us now from Brussels. Faryar, good to see you again. Thanks so much for joining us on Bloomberg Crypto. We're going to talk about what's happening in Washington, D.C. in just a minute, but I do want to get your thoughts on how Coinbase thinks about listing different assets, really in the context of what we learned from President Trump just ahead of his inauguration with the launch of his Trump Memecoin. Is this something that Coinbase would list? Is this something that falls into the category of listing on Coinbase? Like, just give us your thinking around this.
Well, we have a very rigorous process by which we evaluate tokens. And in fact, the folks that do this are very much firewalled off from the rest of us in the company just to make sure that there's integrity to the process, there are no leaks, and that they apply the standards that we use rigorously in each token that they look at. So out of the thousands and thousands of tokens that are out there, there are about 240 that we list on our U.S. platform. And we evaluate each token to make sure it's not a security, to make sure it's cyber secure, and make sure that there's not a scam underlying it. And that's the process that we apply to the Trump coin, which we do list on our platform. And you know, the decision to list is really very much a reflection of what we think the market demand may be and whether the token can meet the standards that we've set. And so we don't comment about individual tokens. You know, we're asset agnostic, but our process is rigorous, and we feel good about where the decisions we make.
When we did see that coin released, we did see some reporting about some concern about folks in the crypto industry worrying that it was a distraction or worrying that it would hurt the legitimacy of some of the lobbying, or at least some of the hopes of what would be achieved during the Trump administration when it came to this space. How do you look at it?
I think every token has a story behind it, and some of the stories are more interesting than the others. People have views one way or the other. We try not to get into the kind of the backstory of any of the tokens. What we try to look at is those standards that I talk about. Is it cyber secure? Is there something about it that is potentially reflective of some sort of scam? Is it a security? And we applied those standards pretty dispassionately and carefully. And so there's a lot of feelings that people have about individual tokens. People have views about the Trump token. Our view is that there's a demand for it. It meets our listing standards, and it's available for customers if they want to access it through our platform.
Well, Faryar, let's switch gears here and let's talk about what's happening on the Hill tomorrow, because the Senate Banking, Housing, and Urban Affairs Committee is holding a hearing that many are calling a debanking hearing. And you actually sent a letter urging U.S. banking regulators to clarify or amend their positions to allow banks to offer custody and trading execution services for cryptocurrencies. Typically, banks haven't really been able to play in that sandbox. And I thought that was interesting, given that, you know, Coinbase obviously offers custody. That's part of your business. And particularly when it comes to a lot of these spot Bitcoin ETFs, Coinbase provides custody. Do you see a future in which Coinbase is competing with the banks for custody business?
Oh, absolutely. You know, our goal at Coinbase is to promote economic freedom. And our goal ultimately in terms of participation in the crypto economy is to bring 1 billion people on chain. And that's only going to happen if we have a broad ecosystem of partners who are ready to service that demand. And so we welcome competition, and we think banks are a critical part of the ecosystem. And so we actually do a fair amount of lobbying just to make sure their status and ability to engage in crypto activity is clear. Now, the backstory on why we wrote this letter is that there was an effort under the previous administration over the course of the last 3 years to essentially withhold banking services from crypto companies and individuals. So it happened to many of the larger companies, but it also happened to just individuals who were involved in crypto in one way or the other and couldn't get a mortgage or couldn't get an auto loan or found their bank accounts closed. And I think what the two committees are going to do this week, both the Senate Banking Committee and the House Financial Services Committee, is to try to unearth as much information as they can about what exactly happened. And for our part, we've done two big important things. One is we've had ongoing litigation with the FDIC to have them essentially release the documents that were the basis where behind the curtain they were pressuring banks to stop crypto activity. And then the letter that we issued yesterday that you mentioned, which is from three of the top banking and law firms in the country, that clarifies that there's no legal basis for the bank regulators to have pushed the banks to debank the sector. And I think those two things are really important for the committees and for the administration. And so we're pleased to be able to have gotten those out.
Faryar, you and I have not had a chance to connect since David Sachs was announced as the crypto and AI czar. He was widely seen and applauded by many within the industry because he would be seen as this bridge to folks like yourself who've been in the industry for years. Can you give us an idea, if you have, of any conversations that you've had with David Sachs thus far as he served as the crypto czar?
Well, I'll say a couple things. I mean, I worked in the White House in a previous administration in a similar role involving international economics, and having a point person who has the backing of the president, whose job it is to make sure that the president's vision in a particular sector or area gets done is a huge thing. And having a guy like David with his talents as the crypto and AI czar is amazing for the industry, but it's amazing for the American people. It'll ensure that on these two cutting-edge technologies, the U.S. will be in a leadership position. We've had a chance to talk to David and to his team, and I think he said to us what he said publicly, and I imagine what he's going to say in a short bit. He's got a mandate from the president to move quickly. He's got good partnerships with the committees and the chairs of the relevant committees to get the work done. And we're really, really pleased to do our part to try to help make that happen.
Well, we are looking forward to David Sachs this afternoon speaking. But Faryar, before we let you go, I do want to talk about the SEC, and I want to turn the clock back to June 2023 when the SEC, of course, sued Coinbase alleging securities rules violations. And I'm curious what the conversation has been like, whether or not you're in talks with the SEC to possibly end that lawsuit.
Well, I can't comment on anything relating to our specific lawsuit, but what I would say is we've had a chance to talk to the new leadership of many of the agencies, and in particular the SEC. I think the acting chair and Hester Peirce, the other Republican commissioner, I think are very much focused on a process to heal the agency. What we've had over the last 4 years is a really abnormal situation where you've got an agency that's refused to engage in dialogue with stakeholders and the public, refused to provide clarity or answer simple questions. And I think the first order of business, from what I understand from them, is to just create a much more responsive and transparent process where people can come in, have their stay, get a fair hearing, and there be a process that ultimately leads to policy outcomes. So we're very, very excited that we're going to be able to, have kind of the normal ability to petition our government like everybody else should be able to on our system. And I think you'll see some good work, including the task force that they've formed under Hester Peirce, and I think there'll be more announcements coming soon.
All right, well, that's a good place to leave it. Really great to get some time with you. That is Coinbase Chief Policy Officer Faryar Shirzad. And I do want to mention that at the top of the hour on Balance of Power, we will have an interview with Senator Bill Hagerty, who unveiled his stablecoin legislation today. But coming up on this program, the SEC is being flooded with crypto filings and just approved a combo Bitcoin-Ethereum ETF. Details next. And to access all of the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg. Well, last week, the SEC gave the green light to part of an application for a novel ETF that would track both Bitcoin and Ethereum, a multi-asset ETF, if you want to call it that. But then the trade spat happened, and the price of Ether plunged by 27% at one point over the weekend. Let's break it down now with Bloomberg's Isabel Lee joining us at the desk. So you have the impossible task of explaining to us what is going on with sentiment and price action right now.
First of all, I like the multi-asset. I wish I had that in the story. But the sentiment right now, it's kind of mixed. So there are a lot of near-term risks for both Bitcoin and Ether. But then long-term, the risk kind of diverges because Bitcoin is still seen as this use case asset, whereas Ether is really kind of a medium of exchange, which is why a lot of traders were shocked by the disparity of the plunge earlier this week. But it's not that surprising given that a lot of DeFi protocols are built on Ethereum. So it's easier for traders to get out of that. And we did see a lot of panic selling by big whales.
But it's also easy for traders to get out of Bitcoin. I still don't understand why we saw this. I'm calling it a flash crash. I don't know if that's the right term. But 27%, a 27% decline in an asset in just such a short amount of time is a significant decline.
So there are two sides of the coin. Ether plunged and Bitcoin didn't, but also maybe Bitcoin was steady. And Ether's plunge is the normal one. So because Ether went along with meme coins, all those tumbled, it was really Bitcoin that just stayed. I think it was just a 6% drop. So it remains to be seen. Bitcoin really hasn't been acting like an inflation hedge, but so have equities. Both haven't. But yeah, I did ask a lot, and they just really credited it to a lot of liquidations and a lot of panic selling. It's easier to sell Ether because DeFi protocols are built there. So then there are a lot of exits as opposed to, it is technically still easy to get out of Bitcoin if you have Coinbase and stuff.
Yeah. Let's talk about MicroStrategy, because something else, if you're taking a look at things to get worried about, and we have less than a minute here, MicroStrategy ending its dozen-week-long stretch of buying Bitcoin on Mondays. What's going on?
So they ended their week-long stretch. It started in October. It's 12 consecutive weekly purchases, but they also sold preferred stock units last week, and then they had to cater to price-sensitive buyers, so that was at the discount of 8%. And then I had to really ask around. I said, is this good or bad? And of course, some were annoying, and we're like, two sides, because it just means they're funding assets. They want to fundraise quickly, but also maybe it just shows that there isn't as much demand. So it could be two sides of the coin, but maybe they'll buy again next week.
MicroStrategy reports tomorrow after the bell. So
look for those numbers.
Absolutely.
those numbers. It's kind of a joke because of cash flows and stuff. It's like a,
I got it. I'm here with you.
All right. Big thank you to Bloomberg's Isabel Lee. That is going to do it for Bloomberg Crypto. Join us again next week. A big thank you also to Katie Greifeld for filling in for Shanali. This is Bloomberg.